that's not going to end well from an ATO perspective. What type of development are you doing, and is it business or capital? Now, in this sort of stuff is also, how do I say it? It's not black and white when it comes to legislation. There's a lot of case law that supports arguments either way for this thing. Now, unfortunately, you get a, what's the word? You get a worse tax outcome with business, but that's what's going to be most developers. Most property developers are going to be seen as people running businesses, not just, and I'll go through capital in a sec, but you will be taxed in most cases on an income tax perspective, and because property or you know the sale of a house or any sort of business, we've got to consider goods and services tax like GST. It can actually be a big chunk of your intended profit. Yeah, but I would say, you know, there's very rare cases where we would say a property development is on a capital basis, where I think the words that they use is a mere realization of an asset. Now, some examples where your development might be on capital is where you've owned a family home for a number of years. You've got a fairly big backyard. It might even be a battle axe block, or you might be able to get a driveway down the side of your house. And what you're doing is you do want to sell either the backyard or the whole thing. But before you do that, because you want to be savvy about it and I guess make some money on the way out, you approach council, subdivide the backyard, and up to you whether you build on that, but even sell the block of land at the back separate to your own home. Now, we need to look at so many things around that, but that could be a situation where we can look on a capital basis, where the tax outcome is a bit better, where you might even get a 50% discount from a capital gains tax perspective. But some other things as well is, with capital, you're kind of stuck in the structure that you've owned it in. So, so if it's the family home, for instance, you might own that in a personal name. We need to look at the tax outcome of that, which, as an individual, the highest rate of tax is, 47%, or, depending on HEX and all that sort of thing, it could even be higher as well. Yeah, and in terms of capital as well, the sort of final thing I'd say is don't play with fire. If the ATO go and review, if you've decided whatever the thing is capital with you and your advisors, and it turns out that it's income tax, it's a business rather than just a mere realization of an asset, that's not going to end well from an ATO perspective. So. And we've had some we've had some clients where you could argue either way with that, and we've got to go in the detail, look at each scenario, even get advice from sort of people who can comment around the case law, so even tax lawyers, depending on the situation. So anyway, this is kind of the biggest question. Some of you, if you don't own a property currently, then this isn't even a conversation we'd have, because if you're looking to buy a property, develop it, and then sell whatever you produce, that's and do that rather quickly, that's for sure going to be looked at as a business or on an income tax basis rather than a capital.